Kyle here with Factum Financial, and in this video I'm going to be breaking down the difference between term insurance and whole life insurance, and we're going to settle this age-old debate. But in order to do that, we're going to need some education around how different these two products actually are. They're both called life insurance, but they couldn't be more different. So let's jump over to the whiteboard and let's take a look at this. Now, what we're looking at here on the screen is a term policy on a 40-year-old female and who's got a standard non-tobacco rating. So decently healthy 40-year-old female looking at $1 million of coverage. So one thing to look out for when you are buying life insurance, you want to make sure that you're buying enough coverage to protect your family against that catastrophic event that we can never fully prepare for. And one of the ways to do that is to buy term insurance. Now, one of the big things that we're going to hear a lot, you'll hear it online, you'll hear other agents or your neighbors, family members talk about the difference between whole life or term, and you're going to hear term is very cheap, and you're going to hear whole life is expensive. So let's really break this down. When you buy a death benefit over here on the right of $1 million, it's going to come with an annual premium. Now, when you are funding insurance, the insurance companies will give you a slight discount on the premium you're paying if you go annual. Think of it this way. If you're the business owner or the operation is the insurance company and you have to pay them 12 times a year versus once, it's less overhead expense on their side to take in one premium per year as opposed to 12. So that's why you'll see a difference between like how much does it cost me if I pay monthly versus quarterly versus annually. So we're just going to assume this individual, this gal is going to pay annually. So the premium she's going to pay is $1,275, which purchases her $1 million of coverage. And for her, this was enough to replace a number of years worth of income. So in this particular example, we're looking at a 20-year term policy. So notice what happens after the 20th year. She still pays in $1,275. There's still $1 million of coverage. And if we go to the 21st year, the premium on this doesn't change, but look at the difference in how much death benefit coverage is there. And typically, we're not going to see people renew these term policies because now to get the amount of insurance you might have still needed at that time, is going to cost you a significant more amount. Now, that doesn't mean it's not worth it. The hard part with this is we're kind of taking a gamble against, do we think we're going to be in better health? Do we know exactly what our financial position is going to be at that time? There could be a lot of events that have happened in that 20-year time period, and we don't really know, like, are we going to be in a position where we feel like we don't need this insurance anymore? Or are we going to be in a position where, man, I really wish I had that. We've had it for 20 years, and going in the 21st year, I'm just not going to pay for that ongoing. So that's one thing to consider when buying term insurance. The premiums are priced perfectly for the risk profile of this asset. Now, somewhere around 98, 99% of term policies will not pay out in their time frame. That's why it can carry such a low premium. This is a very low-risk product for insurance carriers to put out. That doesn't mean it's not important. I think every family should have some type of term insurance policy. It always breaks my heart when I see the GoFundMes for individuals my age. You know, I'm 36, about to be 37, and I'm seeing people my age get cancer, pass away, car accidents, whatever it is, and a lot of times they're not carrying any type of coverage. And then we're seeing them outreach to their community and hopefully organizing $25,000, $30,000 to get a funeral. But I mean, for somewhere around $100 a month, you'll be carrying $1 million of coverage. So for me, it's like if you're in the early stages of life and the early stages of your wealth building journey, term insurance might actually be the greatest option for you. Very low premium, good coverage, for an event that we have a 100% chance of using, which is death. This is a very interesting type of insurance. No other insurance product works like this. Not your home and auto insurance, health insurance. Life insurance is the only product that you have a 100% chance of using during your lifetime. So this is where I think the age-old debate comes into play. Always buy term because it's cheap, and you don't want whole life because it's expensive. And we really have to reframe this because these products could not be any more different. Now, one of the things that you're going to want to learn about insurance companies is that insurance companies do not make deals. And learning that about insurance companies really helped me look at the risk profile and helped me understand and educate my clients on why they would want one versus the other, or maybe the best alternative is I might be carrying both, which is what I actually do. The only way for us to discover that is you have to work with an agent that's going to ask you the right questions around what are you actually trying to accomplish. Okay, so be leery of insurance agents that are just willing to sell you a product without asking what you're trying to accomplish first. So I carry term and I carry whole life, and I buy them for very different reasons. And one of the things you have to understand is insurance companies do not make deals. So it's not that term is cheap and whole life is expensive. These products are built with completely different risk profiles, and that's why they'll carry a different level of premium. So you could say term has a low premium, comparatively speaking, to whole life insurance for the same amount of death benefit coverage, but that doesn't mean it's cheap, and it doesn't mean whole life is expensive. Let's break this down further. So now let's look at a whole life policy. And we're not going to do anything fancy with this one. This is just plain Jane vanilla whole life insurance. No paid up additions riders, nothing fancy, no intricate case design, trying to achieve and help you hit your wealth building goals. This is just standard base premium whole life insurance. So we still got the same 40-year-old, standard non-tobacco, $1 million of coverage, but now look at this annual premium right here, $13,290. So let's look at this illustration. We got total net death benefit, which starts at $1 million. And then we have the premium right here, which is this total annual outlay, and that is $13,290. So right out of the gates, you're saying, well, this is like 10 times more expensive. And it's not that it's expensive. This product will be in place permanently. It never expires. So there's certain guaranteed elements in here. Your premiums will never increase. On the term side, if you want to maintain that same level of coverage going into that 21st year, you're going to now see a drastic increase in your premiums. Not because the insurance companies are trying to get you, but because that's what you signed up for. That carries the risk profile. With whole life, all that's already built into there. So I like the idea of my premiums are fixed for life, which means they can never go up, but I'm also going to see an increase in that death benefit. But something else you'll notice on this is you're going to see this column right here, this total net cash value. You see, the premiums we're paying into this policy build cash value. You could look at the cash value on your whole life policy, much like equity that you would have in a home. So maybe think about like term insurance is like renting a home. You're still paying rent to live there, but you don't build any equity or you don't have any ownership of the asset. If you buy your home, you purchase it over time as you're making those mortgage payments, you are going to build some equity inside that policy. That's one of the advantages of going to whole life. Now, you're going to see this crossover point in both of these products, and this is where you want to make sure you're getting asked the right questions from your insurance agent on what are you actually trying to accomplish. So let's go back and do some quick math on the term. So we have a term policy that we're paying $1,275 per year times 20 years. So $25,000, we'll just call that $25,000 by year 20. And now that policy most likely is going to be done. It was a 20-year term, so most of these are not going to be renewed. So $25,000 is what was paid, and after that, going into the 21st year, what do you have to show for it? Well, the answer is nothing, because you're not going to renew this policy. So $25,000 in premium, that seems cheap until this thing expires, and then it becomes 100% of those premiums were pure expense and cost. Now, that doesn't mean it wasn't worth it, because had you passed away in that time frame, that would have been one of the most efficient places you were storing some capital, saving into that policy in the form of premium. Now, if we jump over to the whole life side, if we go to year 20, let's take a look at this. Year 20 right here on the whole life, you're still paying in $13,290, and you've paid in $265,000, way more than the $25,000 on the term policy. But look at what you have. You have access to $306,000 in that policy of equity. And you have a death benefit of $1.1 million. So not only did you recoup 100%, it's actually about 115% of that premium you have available in equity, which is the cash value of the policy, but you also have that $1 million death benefit plus 144,000 more. And so if you look at this, about this time is when you might have said, maybe we should have been buying whole life. Now, you got to be able to afford those premiums. And that's why you need to talk to your insurance agent about what's your savings capacity. Do you need a more efficient place to store long-term savings or cash reserves? I think life insurance is one of the hardest to beat from a long-term storage of wealth perspective, okay? Something that term will never do. Now, like I said, I carry both of these. I have a lot of whole life insurance. I think it's one of the most efficient places you can store long-term capital and savings. And I also own term insurance because if I get cancer in the next few years and I'm not done buying permanent life insurance, I have something called a convertible term policy. Not all term policies are convertible, but it allows me to convert that term policy in that time frame that I purchased it with little to no underwriting. So make sure you ask your insurance agent, is my term option convertible? And there's a lot of other fancy things you can do with this that we're not going to get into in this video, but that's the way it would work. So let's go back to the numbers. At year 20, your term policy is going to expire. Your whole life policy is really kicking it into gear because here's what's actually happening. You're paying in that $13,290. But look at the change in your cash value over that 1 year. You paid in $13,290, the same premium you've been paying, but your policy grew by $24,000 that very year. Let's just do a quick calculation on that. If we have $24,609 divided by the $13,290 is the premium, that means at this point you're getting $1.85. $1.85 for every dollar saved into this policy in the form of premium. Now that is a very efficient place to be storing some of your savings. And the best part is it only gets better from there. And that's why I'm saying you want to look at this as when is that crossover period between term is going to feel cheap until it's not, and whole life might feel a little bit expensive until it doesn't. And this is why great questions are your number one solve for understanding this. Now, let's jump over here, and I want to look at one more thing. So I don't think the conversation is, is term cheap and is whole life expensive? I think the question is, and I think everyone wants to always go to this, what is the cost? What's the cost of the whole life insurance? And I don't think that's the right question. What's the cost of term? What's the cost of whole life? One's cheap, one's expensive. The real question you want to ask is, what is the value I'm getting from my term insurance or my whole life policy? So the benefits that you get with term is it's going to have a low premium, but it's going to expire. And that's and you get death benefit protection. When you go to whole life, you're going to get guarantees that these 8 benefits are always working for you. Your death benefit will always be there. Your cash value will increase. Your premiums will never change. You get the benefit of your savings will be constantly compounding for you. They never get interrupted. That cash value that's building is completely liquid. This is a very private asset. You have a loan provision if you want to get fancy and use that loan provision as part of your debt strategy or your investment strategy. You still have that death benefit like the term, except this one's going to go up every single year. Your cash values are growing every single month, which can help with, cash reserves, liquidity, helping you get through uncertain times. And the competitive yield you get on life insurance is very, very tough to beat from a liquid, safe asset. So the real question I'd be asking is, what is the value I'm getting from the type of insurance that I own? Now, if you're watching this video and you're like, I don't really know what kind of insurance I have, I don't know why I'm paying for it, and I don't have a good relationship with my agent, that to me is what's called low value spending. You're spending money on a product or an asset that you don't really understand. So you want to make sure that you're maximizing this, which is why your relationship with your agent is so great. Now we're going to look at one last thing, because whole life is meant to be in place. This is going to be a shocker, but for your whole life, it's kind of in the name of the product. You want to look at this as, if I'm going to keep living past age 60, which most of us are statistically likely to do, how much better does this asset get over time? So now if we take this same policy and we say, well, I'm probably going to live to like age 85, and I'm going to pay in the same $13,290 a premium, but now that policy grows $57,000 that year. So if we break this out again, it's going to grow $57,797 divided by that same premium, $13,290. That means there's $4.34 for every dollar I put into that. That's the growth at that time. Now I have yet to see a case scenario where that does not benefit me in the future. Life is going to carry a lot of uncertain events, and having an asset that's guaranteed, that'll get better every year, and that's going to have an increasing death benefit that I can use as part of my estate plan, all of these things I see as advantages. Now, at this time, you have paid in almost $600,000 of premium, but you have access in equity to $1.3 million. And so I think at a certain time, you're actually going to have this script flipped in your head. And this will be the cheapest insurance you ever own, is whole life insurance, but you got to hold it long enough. It's not called 3 to 5 year life insurance. So if you're going to buy life insurance, specifically whole life, and cancel it in the first 3 to 5 years, term was probably a much, much better option for you. And so hopefully this video helped you get some solid education around the difference between term insurance and whole life insurance and why you might want to carry both, but you got to buy these for your unique vision and goals for your life.